Hi guys, welcome back. Wow, dramatic day indeed. Yesterday I came here to give you an alert, a warning, and today I came to give you good news. So in my video last night, I said I'm seeing a sell-off ahead. So I was giving a risk alert to warn all the investors to be prepared for a sell-off. And today we saw a bloody opening. It was even more brutal at the pre-market. I think that was quite scary, and it really drove a lot of investors to panic sell at the last moment. Because in the morning, basically all the stocks at the pre-market were dropping at least 5%, 10%, or even more. So I think that's when people might lose it. Because seeing the portfolio dropping little bit day by day after 2 weeks, and you might be still okay with it, telling yourself that I'm a long-term investor, it will go away. And then the more it goes on, later you would tell yourself, if only I sold last week, I wouldn't be down as much. Maybe on this day you would say, if only I sold yesterday, I would save how much? And finally, it gives you not just a little bit dropping, but a lot. And that's what I would usually consider a final shake, because this is when most people cannot take it anymore. And that was what happened to this morning. Before we see the big rebound, especially at the open, starting from the pre-market. So I gave a warning yesterday, but I did not expect the sell-off to happen so quick and so strong. So yesterday I said I will exit the short-term trade at any rebound so I can keep some cash aside to prepare for the worst case scenario. But this morning it was pretty bad and creating a lot of panic. And I knew that many people would be selling all at the same time. Then in this case, of course, we don't sell anything. Because if everybody is rushing to get out, then this is where we stay put. And this is why I had to give a market update video yesterday to warn a big sell-off coming. So if you have watched it yesterday, you should be prepared for this to happen, and it shouldn't take you by surprise. So this morning when I checked the pre-market, I was worried at the market open people would be panic selling. So I sent a message at 9 a.m. explaining why the massive sell-off, because large institutions wanted to sell out before anyone else. So that's why we saw the big sell-off yesterday and this morning. And this morning was followed by a lot of retail investors. I thought everyone would be quite panicking in the morning. So I gave an example of a big party with hundreds of people inside. And the building has a spot that's on fire and everyone is trying to run away at the same time. It's a small exit, but there are too many people running away. So people are stepping on top of each other while the firemen can't go in to put out the fire because people just keep running out through this all together. Some people are even too scared and they're jumping off the building. So it might be a small fire at first, but because people keep running away, so the firemen outside can't get in, and the people running away are getting hurt and step on top of each other. So would you rather escape risking to get really hurt or waiting for the firemen to come in and put out the fire? In my mind, that was exactly what happened in the morning, is that all the retail investors just couldn't wait to get out as soon as possible, stepping on top of each other, making the price really low. And the big institutions, the firemen, they're not getting in until everyone finished getting out. This is the scene to me in my mind. When I see panic selling like this is why I don't like to make any decisions when I'm not calm or driven by emotion. And this is why only on a rebound and on a good day, I would remind people to take profit or keep some cash. And this is also why in the past, during the good days, I've been telling on the Discord to keep cash, take some profit, or trim the position, so you can stay more calm when this kind of things happen. And then I follow up saying that what's happening to small caps right now, it's like what happened to the recovery stocks last February or March in 2020. While we don't know which day exactly we are in right now, but very important to point out here is that emotional sell-off usually follows with strong rebound. And I said it during the pre-market, before the market opened, before we saw all the strong rebound later. So I really hope that no one had panic sold in the morning at the market open or during the pre-market when everyone was stepping on top of each other. And I felt quite happy when I saw my Discord member saying this later. I'm glad I waited for the fireman. Now, ever since the correction has started, I have been saying that Nasdaq had not dropped to my target of 13,278. Today it opened up below my target already. The lowest point was 13,107, so 100 something points lower. So in terms of depth, I think we have enough correction already, especially it has backtested the 120-day moving average. And if I open the 1-hour chart, we can see this correction started from the highest of 14,211, and then if we draw a price range and time, we can see that from the top to the low of Tuesday, it was dropping 23 bars for 5.1% and then rebound for a few days and continue the dropping. From the top here to the bottom of this morning, it's another 5.2%, so very close to this with similar time period. I can show you with the arrow. So that was the first wave, the A wave, and then after the rebound, the C, A, B, C. And it's almost exactly the same depth, making a very symmetrical A, B, C. So that's why at most, I think we can still see a little bit more time of shaking or consolidating, but we might have seen the recent low already for Nasdaq in terms of the depth of the correction. For example, if we look at Apple, if you remember last Tuesday on this day, I said that I would expect Apple to drop to 123, and today we saw the lowest point to drop to 122.7. So that's close enough for me. And then it rebounded from there. There was increase of volume. It means institutions were buying the dip heavily of Apple. So I think it can get back above this support soon, above 125. But for now, it still needs to digest the selling volume, selling pressure from a few days ago. So I would assume Apple to be moving below the resistance of 130 and above the support of 125. So that might be the movement of Nasdaq as well, moving above the support of 13,300 and below the resistance of 13,600, or could be a range from 13,600 to 13,800. So I think Nasdaq might be moving within this range. So it was yesterday in the morning when Dow Jones was growing on fire, increasing another near 1% day after day, yesterday morning, that I said I see more and more people FOMO into Dow Jones. And when this happened, which is getting there, tech stocks should rebound, and then that would be your chance to slowly trim some tech position if you are 100% in tech. So I know a lot of people might have been regretting to not diversify their portfolio and be all in on tech stocks. So that's why I said it yesterday that you can wait until the Dow Jones get into correction and the tech stocks to rebound. And not long after I said that, we saw that Dow Jones had a big sell-off since then. So that was when I sent the message and said I saw FOMO into Dow Jones. People are chasing. And we saw the big dip yesterday afternoon and this morning. And unlike Nasdaq, it did not have a V-shaped recovery, but stay at the bottom. You see, yesterday it closed with an ugly hammer line indicating a top. And today we saw the sell-off continue. So I said this morning that I see the capital is flowing from Dow Jones to Nasdaq to the tech stocks as expected. For now, it is supported by this 20-day moving average and bounced back up. I don't know if this support can hold, otherwise it would reach a lower support. But anyways, I see Dow Jones need to get into a little bit of consolidation. The overall trend, the recent trend has not been changed. For now, we are still in the phase of hyping up value recovery or things related to fluctuation. But at some point, this sector is getting too heated and it needs a correction. Yesterday, I have warned the risk that might be driven by the ARK ETF because of the massive sell-off recently as they are being the target. And the large institutions have been selling off their position, especially the top holdings of ARK ETF, to try to be earlier than anyone else to avoid systematic sell-off similar to what happened by the end of March. Because if the capital continue to sell off from the ARK ETF, if a lot of investors continue losing confidence in ARK Invest, and also ARK had been the top shareholder for many small caps companies. So if ARK is forced to sell out of their position, it might drive to further dipping or crashes from a lot of the growth stocks. As we see this tweet, says Nasdaq will keep sliding until ARK is archegos. This is directly pointing to ARK. But today I saw that ARK had been selling out of some position in order to buy back their own shares of the ARK ETF. To me, I personally think this is a smart move because the number one important thing right now is to ensure ARK's investors and give them some confidence. And by buying back their own shares can solve some issue in the confidence right now, at least for this moment. Because as long as investors gain more confidence in ARK, the money, the capital would come back slowly. I really hope they can dodge this bullet because at least they're not using any margin unlike archegos back in March. So at the end of the day, the biggest issue is confidence. Today, the share price had been at a critical point at the 250-day moving average. Doesn't look like it wants to drop below yet. It had a strong bounce back up with big volume too. So we might see a reversal here if it can quickly get back up to the trend line that it fell below a week ago. But we see another good sign for Baidu because we know a lot of the big capitals have been selling Baidu because they know that ARK ETF has been selling it, dumping the shares because as they need to cover up the other positions. And today we saw some buying the dip action. It had a rebound of 3%. So we might see some capital finally start to buy the dip of Baidu. If that's the case, it would mean they think the dust is settling and ARK is finished selling Baidu's share. Something worth mentioning was the Shanghai Composite Index. Yesterday, we were expecting some sell-off because there were massive sell-off with all the indexes yesterday at the US stock market. Dow Jones, S&P 500 and Nasdaq, big sell-off. So that's why we would expect the Shanghai Composite Index to have the sell-off. And yet, last night we saw a strong dip at first, but also a stronger reversal very quickly, while all the other indexes were down dramatically. So I think this is the brightest star of the night. Even though the recent US stock market had been up and down with a lot of storm and complexity, the Chinese stock index had been showing stability, still consolidating for a while and holding strong regardless of the sell-off at the rest of the world. And we saw yesterday and the day before there were buying volume. So this is looking more and more interesting to me, as I have been expecting the Chinese stocks to perform well. Hope this can continue because like I showed this morning at the Discord, out of all the index, we saw the China's ETF of the big tech turning green first before all the other index today with buying volume. So I said the Chinese stocks had been saving the day because I think the fear of the CPI number to be announced tomorrow gets people worried about the fluctuation, and the rise of fluctuation actually benefits emerging market. For this, I have shown you in one of my videos about Chinese stocks a few weeks ago. I show you how the rise and fall of inflation affects the equity in the emerging market, and that was one of the reasons to support my plan on Chinese stocks starting from the year of 2021. Okay, so if you haven't watched that, you can check it out. Here, I'm not gonna repeat the same thing. So I don't wanna make this video too long. I just wanted to come here to give you good news and share my opinions. For now, I see rebound from Nasdaq. It could be a reversal, but it's too early to tell. We can do more update later. But for now, I think most of the tech stocks we hold would rebound together, at first at least, because I do believe some tech stocks would rebound and some wouldn't. and we might have seen the highest top already back in February or March. But I think we will see the divergence later, not now. Because right now, a lot of the tech stocks have been oversold, so they should rebound together at first. And we will see the divergence later. But for now, I think we have seen deep enough fall from this correction, and I expect reversal from here, even though it might not continue to be strong right away. But for now, I think we can hold on tight to our tech stocks, especially if we have bought the dip today and yesterday. And when Nasdaq or Russell 2000 reach the resistance level, we can trim it off. I might make another video, depends on the market's environment. But remember that I'm only here to share what I think, and it's only my personal take and opinions. And I'm not your financial advisor, so make sure you do your own research and thinking analysis before you make any decisions, okay? Now, if you have enjoyed this video, please give me a big like and write me a great comment. And I will see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.